Good morning out there, Slow Life Trader. This is Robert again, coming at you with another episode. I'm just chilling here, waiting for the market to open. I got a little time. I done already did my prep work, and I'm having a cup of coffee on my patio, people. On my patio. Just listening to the birds, looking at the trees, just enjoying. I give you a look. There's my pool area, and up there's the trees. And I don't know if you can hear that bird or not, but you can see the sun coming up. Or it's up already. Anyway, what I wanted to talk to you about today is the Fed, okay? Some people want to know, why in the world does the Fed even raise interest rates in the first place? Or why does he cut interest rates in the first place? Well, I'm just going to address why he's raising interest rates right now. The reason why the Fed is raising interest rates is because inflation is too high. I mean, think about it. The price of meat and eggs and gasoline and housing prices and automobiles and everything has shot up like crazy in the last couple of years, okay? Well, and the part of the reason why things shoot up so crazy is because money has become easy. Let me give you an example of what I mean by that. Money has become easy. When interest rates are so low, people can go borrow money for like 1%, and in some cases 0%. They have a lot of cars now that you can finance, or at least they did at one time, where you can get zero financing. Where if the financing is zero, that means that they probably going to raise the price of the car, because they have to make profit some kind of way, okay? They can't just give you free money and don't make money some other kind of way. So the way they make money is by raising the price of the car. Well, they do the same thing with houses, okay? And then also the government has been giving money away. You remember them stimulus checks you were getting? And the child stimulus that they've been giving people, saying that, kids, they lifted so many kids out of poverty. Or here's one, they raised the minimum wage up to, now the government didn't do it, but a lot of different states done it. The federal government didn't. And I think in a lot of places, the minimum wage is $15 an hour. Okay? And I'm not saying that that's wrong to do. People need to make more money. And then also, look at the help wanted signs. Everybody needed help because people are fully employed, which means people have more money to spend. Okay? Well, when all this is going on, prices get high. Well, now the prices are high. We got to try to lower those prices because they're just ridiculous. People can't live with the prices this high. Gasoline, $5 a gallon in the South. The South usually don't have gasoline that high, okay? And in other parts, it's $6 a gallon. In California, it's probably close to $7 a gallon. I don't know. It's up there. Anyway, the way that you bring that down is by raising interest rates. Well, so the Fed raises interest rates, and he's going to keep doing it a little bit at a time. And in fact, he's doing it faster than a little bit at a time. A little bit at a time would be a quarter of a point. He raised it this last time 7.75 of a point, which is 0.75, okay? And they're talking about doing that again. And they're going to probably keep doing it until they start to see things cool off or improve or prices start to get cheaper. You say, well, how does that make prices cheaper? The way that makes prices cheaper is because now money is a little bit harder to borrow. So people stop borrowing as much money, okay? Interest rates on cars are a little bit higher. People don't refinance their homes. So when they don't refinance their home, that's almost like free money to people sometimes. They'll refinance their home and then their mortgage payments gets cheaper. Now they may have to extend it. They may go from 20 years back up to 30 years again. And then sometimes because the interest rate was so cheap, if they had a 5% interest rate and they get to cut it down to 3.5 or so, or 4, sometimes they can keep the same 20-year mortgage and still lower their payment and then take out $15,000, $20,000, $30,000 worth of cash, okay, and keep the payments the same and the term the same. Or in some cases, lower up the payment and keep the term the same, or lower the term and keep the payments the same. You get what I'm saying? All different type of ways. Well, when they raise interest rates, you eliminate a lot of that money coming into the market. and it makes companies, keep in mind, what I had to learn when I first started trading is everything affects everything. It may not seem like it, but it does. And here's what I mean. If you don't want to go borrow money because the interest rate is too high, well, you're not by yourself. There's a lot of people like that. Well, you get so many people not wanting to borrow money or not want to finance things, then they're not buying things. And if they're not buying things, the people at the store are not making commissions. So guess what? The store is not making a profit. So they start laying off people, okay? And as they start laying off people, you get less and less people that's willing to buy or able to buy. Well, this just keep going on until it becomes a snowball effect. Well, they start this by the Fed raising interest rates. So he's going to keep doing this, and this is why they're worried about the economy going into a recession, because sometimes they don't see the improvement numbers until they have already raised the interest rates too high, okay? And then it takes a while, just like it's taking a while to cool it off, it takes a while to warm it back up again. So sometime in the process of cooling off, you may go too far before you see that it's improvement. And once you see that it's improvement, people are already out of jobs, and it becomes a snowball effect, and it's hard to stop a big snowball. Or here's one: the trend in motion remains in motion until it stops, okay? But at some point, it will turn around. Hopefully, when this stuff turns around, it don't go too far in the other direction, because it has definitely swung too far in the inflation going up direction. But anyway, I hope this gives you some kind of clarity of why the Fed raises interest rates, okay? And then if you get to the point where someone asks me a question, well, then why does he cut interest rates? Then we'll go over that at that point in time. But right now, we're just going to talk about why the Fed raises interest rates. Hey, if you like this video, hit the thumbs up button and subscribe. And if you want to learn to be a slow life trader, of course, you know where to go. slowlifetrading.com. This is Robert. That's all I have for you today. Until the next time, peace out, and I'll see you on the other side.